In this video, we are going to discuss the valuations of an altcoin and how you should analyze them. You should also realize that in this video, you will be learning how you can make the best decisions for yourself when it comes to trading altcoins and valuing them. The reason why I wanted to make this video is that there is often a lack of background information provided on how you should analyze or how you should be valuing an altcoin. Perhaps the altcoin is making a new all-time high in the USD valuation, but maybe that is solely due to the fact that Bitcoin is running up and not the actual altcoin. This information is crucial to know because having background information on this matter is actually providing you with additional tools on compounding your returns through the cycle, while not understanding this important concept will ultimately result into a case that you're going to be losing value over time or not getting the maximum out of your bull cycle. The reasoning behind this video is that I've been making these mistakes in my previous cycles too. I've stayed into positions for too long and resulting into opportunity cost and resulting into the way of thinking that I was actually making profits, which I wasn't doing at all. So I didn't make the maximum gain of my portfolio and ultimately a lower result than when I was aware of this actual fact and when I started compounding my returns. The reason is that I've been going through it. I don't want you to make the exact same mistake. So ultimately, this channel is designed for you to making sure that I share my experiences and journey with content I wish I had when I started in my journey in 2017. It's been more than 7 years since I've joined the crypto markets, and it's been more than 4 years since I've been on YouTube, and it has been an absolute roller coaster. Before we continue, I'm more than happy that I'm close to 165,000 subscribers on the YouTube channel, and I'm more than happy that you have decided to watch my videos. And I would like to thank you for that, and it actually fulfills me because last video has got so many positive comments, so many good feedback where we got more topics that we are going to discuss on this actual YouTube channel. So if you have any topic you would like to see discussed, make sure to comment beneath. I'm reading them all. Also, I'd like to make an agreement with you. If you subscribe to this YouTube channel, I'll make sure that I'll continue to increase the content as much as I can, and I can share that we are having a lot of new things coming up. New name, new production, new content, new studio. It's all going to be there for you. And in that regard, I've been mentioning this last week as well. We've got the MN Trading Consultancy. There's an enormous interest into the actual product, and we are happy to share that we are currently actually full. This means that we're not onboarding any new clients anymore, as our mission is not to have as many clients as possible, but to provide the best quality as possible. You can still sign up through our website, then you'll be putting on the waiting list. Of course, we will be opening in approximately 2 months again. So if you're being put on there, you can be onboarded in the consultancy in 2 months' time. Additionally, we are hiring. So if you're looking for a position as a consultant, a business development manager, content manager, editor, performance marketer, or research analyst, or a consultant, as I mentioned, make sure to check the website and the career page where you can find what you're actually going to do, if you would actually be a great addition to the team, whether you want to have an impact in people's lives, all can be seen there. In our last video, I've been explaining everything surrounding the $1,000 altcoin portfolio, giving you the first steps moving forward. In this video, we are going to be going into a little bit more of in-depth technical charts and analysis, and I would like to share them with you because it is important to have this actual background when you start trading. If you're a trader or if you're an investor, you need to look at valuations, and if you don't like it, of course, but you need to start looking at charts. So in this video, I'll be providing you with information on reading them, understanding valuations, and understanding the metrics of behaviors in markets where markets, especially crypto, are sometimes hard to understand. And the more you know, the more you'll be ready to make the most of it. I'm making this content as I'm sharing my own mistakes, my journey, and my experiences with you to make yourself ready for a financial stable future. Let's go! Before we're going to discuss the topic, of course, we're going to discuss the actual market outlook. And I've become a little bit bearish on the markets for Bitcoin. I'm not sure whether it's going to be remaining, but the sentiment is so bullish at this point that every argument that is not bullish is going to have a substantial impact. Why I'm saying that is the following. During ultra bullish sentiment, you can see that events are having a large impact to the markets. At some point, bullish events are not having an impact at all anymore because the actual event was already priced in a bullish manner based on sentiment. But then if there is something that is turning out slightly negative, that's going to induce an impact in the markets that is not great, which usually means the markets are reversing into a very harsh correction. Corrections in crypto markets usually do not take months, they take a few weeks, and then especially Bitcoin, and then they consolidate. And I think that at this point, Bitcoin is still following suit when it comes to the actual momentum. So we are seeing that Bitcoin is still doing the pre-halving rally, is still finding a potential peak, and is looking for the correction pre-halving and post-halving, after which it's going to take a longer period before we are going to accelerate again, which I think is going to be August, September, around that period. In between, we are going to have a case of correction on the entire market, but also a generally alt season or anything called in that perspective where the Ethereum markets are going to do really well. And I think Bitcoin has been correcting, Ethereum has been correcting, Solana has been doing great, especially based on the fact that there was a meme coin called Poppe or Boom that has been getting 1 billion in valuation or even above it in just a matter of few days, inducing that the altcoins are being sold off because people jump on that train as the entire Solana ecosystem is doing great. But Bitcoin is looking a little bit peaked on the lower time frames from a technical perspective, where you can see that at this point there are a few important ingredients to look at. First of all, upwards move, lower volume, which is usually a sign of weakness. So if you get higher and higher and higher, and the volume is starting to drain down, usually that means that there is less buying pressure at this point. Additionally, there is a valid bearish divergence on the daily time or on the 4-hour time frame. You could argue that there is also one on a daily time frame. I don't believe that it's super strong. If you look at the previous periods, it's the same. It needs to create lower highs and lower lows on a daily time frame to confirm. But when we're looking at the lower time frames on Bitcoin, we can argue that we are close to a potential wider correction or period of consolidation based on the fact that we're seeing this current correction taking place on the actual charts. All right, so we see this bearish divergence, which is a technical frame, and we can also see that based on that fact we are having these rejections taking place, and there are more arguments. So practically seen, we are at pre-halving, we are likely peaking. The invalidation for this entire idea is that we break above 71k again, then we might even get a move that is comparable to this period, where we just continue to grind higher and higher and higher, but that's depending on the inflow on the ETFs. If a correction takes place and if we do not crack above this level, I think we are going to have a wider one, where my primarily target is anywhere around or slightly beneath the 60k level for this first correction, and then we probably are going to do something like this in the coming periods of a few months, and that window in between. So altcoins might be dropping right now, but the Bitcoin dominance isn't really accelerating. So in between the second correction, that is the window where altcoins start to do really well. So at this point, the corrections are obviously relatively harsh if you are into altcoins, but the moment that Bitcoin consolidates, what you need to be looking at is that you're looking at a case where altcoins start to jump in their Bitcoin pairs, which we will be discussing. So short term, not that bullish until Bitcoin breaks 71k. Although in the past week we've reached a new all-time high of 73,000, and during the weekend we are moving between 66 to 70k. Now, one of the reasons that have an actual impact is the ETF inflow. Massive inflow in the previous periods, resulting in a case that the inflow is currently a little bit weaker. Because of the fact that it's weaker, it has an impact in the markets that there is not really that much hype at this point, through which maybe a slight rotation or there's less money needed to start moving the markets. Overall, you can see that the net inflow is two days in a row lower than the previous period. The previous period where we had negative numbers also resulted into a correction. It's not for granted. We are at 12 billion at this point. The estimates are that we're going to see 200 to 300 billion as net inflow in this cycle. So the fact that we're seeing 12 billion at this point is still super positive. But what I've been saying in the previous periods is that at the point that it's going to go lower, or at least it starts to drop a little bit, it usually has an impact in the markets because the markets are pricing in that it continues to stay at the rate that we were seeing, but that is just not a valid argument. So at some point, the inflow is going to change. We will see outflows at some point. We will see a lower inflow, and that is actually the case at this point. And this topic is going to move away at some point in time, and that's what we're seeing right now too. There's a lower inflow inducing something, which is that the markets are dropping slightly. And then additionally, if you're looking at the markets overall, you can see that there is still a very much comparable price action as with the halving in 2016. 2016, we didn't get towards a new high, but we did get close. And I think the overall estimate is that the cycle that we're currently seeing is very much comparable to the cycle that we are seeing in 2015, 2016. And because of that, I suggest that it's going to have a massive impact. So we're currently at June 2016, which is around 19 months prior to the peak. I think this cycle might take longer, but what we see here is a strong impulsive move pre-halving, resulting into a strong correction pre-halving. I don't think it's going to be that swift. Another sideways period, correction for the entire markets, and then we started to heat up again, in which we were going sideways for 6 months. So we are still doing the exact same. We are still seeing the pre-halving rally, and there is still a chance that we're seeing a pre-halving correction, which is inevitably going to lead to altcoins to doing really well. Another argument that is not good, we are facing FOMC next week. That is the Fed deciding the interest rates. We have been seeing PPI coming in way hotter than expected. PPI is the producer price index. Month-to-month data is 0.6%, which is way more positive than expected at this point, as it was expected at 0.3%. Core also came in hotter. Retail sales came in worse. So actually those are arguments that the economy is getting weaker while the inflation remains sticky. Additionally, on Friday, manufacturing index, which is a real estate index, terrible. And that was also the case of the consumer sentiment, which starts to lower and starts to decrease again. So ultimately, that's not a great signal. And I think that we probably are not going to get a rate cut. I think it will remain the same level. And always pre-FOMC, there is volatility in the sense that markets are selling off their positions. So I would suggest that in the coming few days we continue to do so. And if we are not going to get a rate cut, honestly, first thing, markets drop, and after that they come back up, because a rate cut is not bullish at all. But so that's why I think that if we're sticking on this level, that's positive. Finally, total market capitalization close to a new all-time high. Probably going to get a period of consolidation before continuation. We've expanded from 1.6 to 2.7 trillion, and it's super bullish. I think that just slightly we're going to see a rotation coming from Bitcoin, and that's why I suggest that the Bitcoin dominance is perhaps maybe going to have another push, but it's close to peaking pre-halving, just similarly as we've seen in the previous cycle, just similarly as we have been seeing in the 2016 cycle, in which in July the halving took place, and from there you can see that the Bitcoin dominance continued to fall. So until date, the markets are still continuing to rotate towards what we can see. Overall, pre-FOMC, there is always that correction taking place. Now, before we can analyze altcoins, you need to be aware of the fact that there are different valuations of an altcoin. First of all, a valuation of an altcoin can be done in several ways. And you can see that I'm saying these things on social media often as well. But why am I saying it? Why is it important? Well, you need to understand that there are risks involved by trading altcoins, and you need to make sure that you're rebalancing your portfolio in the right manner throughout the cycle to maximize your returns. Now, the primarily question is, how should you be valuing an altcoin? Well, it might sound strange, but the valuation of an altcoin can be derived in multiple values. So first of all, you've got the actual case of a USD valuation. And you can see on the chart, Chainlink is valued against USDT. Now there are also different ways, which you can see on the chart here, which is Chainlink against Bitcoin. All right, on top left, you can see Chainlink / Bitcoin. Chainlink against Ethereum is also another way. So there are three ways of valuing, which I'll be using during this video. You can also value an altcoin of Chainlink against Solana. You can also value an altcoin of Chainlink against Cardano. All things are possible. But what is it actually saying? So for instance, Chainlink against USDT is currently valued at $19. So one Chainlink is costing $19 US. All right, that is just right side, left side, making it like equal. That's why it's the valuation. That's what the markets are valuing it. So this can also be done in Chainlink against Bitcoin, which means the exact same, but then we're just valuing it different. So this chart says one Chainlink is valued at 0.000277 Bitcoin. Technically, it equals the exact same as $19, but the valuation is in Bitcoin. And I'll get to the important factor in a little bit, but this is just background information. The final thing is, you can also say one Chainlink is valued, and this is Chainlink against Ether, at 0.00515 ETH. So one Chainlink can be valued at 0.00027 Bitcoin, or one Chainlink is 0.00515 ETH. So this is super important, because through these data points you will be able to derive all the important information you need to start trading altcoins through the entire cycle. And I've just mentioned what the valuations actually are. Now I'm going to describe with you what you need to do to be actually making sure that you will be understanding this basic concept even more. And for that, I'll be using Chainlink as my narrative, because Chainlink is showing a beautiful example of why evaluation of Bitcoin is important, but also evaluation of USDT. So first thing that I would like to do is, we've got the Chainlink chart against USDT here, right? Chainlink has been doing great. It has been starting its run from around $5 or anything between $2.50 to $5 here. And during the DeFi summer in 2020, we've seen this acceleration going great. Peaked at $20, came back to $7, harsh correction. And from there we started to run towards 52. And again, correction towards 14 and another push up. Wonderful, good, great stuff. What is important here? The USDT all-time high was actually at 17 May 2021. All right. Now what I would like to show is the following. Chainlink against Bitcoin. I'll just use a different chart, I guess, for this one. Nah, I don't think we can actually find one. No. I'll just use Chainlink against Bitcoin. What I want to show here in this chart is the actual following. You can see that Chainlink against Bitcoin is doing great too. Consolidating and started to break out here, in which we are peaking at this level. We find another peak, some beautiful corrections, and then the actual all-time high is reached at the number of 0.001695 Bitcoin. Alright? Since then, Chainlink has been trending downwards, currently as well, but it has been trending downwards. Now, what is the important factor is the following. This peak is in August of 2020, while the peak against USDT was way later in May 2021. So there is some information you should be deriving out of that, because that is something important to understand, making sure that you know all the important factors behind it. Alright? So what I mean by this is that what did happen, that Chainlink against USDT is peaking in May 2021, but the Bitcoin pair is peaking in July 2020. Well, it's very simple, but I would like to show it to you. It is because since August 2020, which is here, and May 2021, Bitcoin has been going up from 11k to approximately 60k, and in the meantime, Chainlink against Bitcoin, so the valuation of Chainlink against Bitcoin, has been dropping by close to 60 to 70%. So in that aspect, if you go back to the USDT chart, you can see that this one peaked in May 2021, but this one was going up by less than Bitcoin was going up. That's why the Chainlink against Bitcoin pair was dropping by 60 to 70%, and that is why it is important to realize that sticking into your altcoin position isn't always the right time to do so, or the best strategy to do so, and that's why valuations could be different, and that's why the USDT valuation could be completely off the actual important factor of whether the altcoin is doing great or whether it's just Bitcoin making the actual move. In the next few topics, we're going to discuss what you actually should be having as a target and what you should be deriving when it comes from these charts and the data that you need to have. The target that you need to get in a bull cycle, it should be completely clear for yourself. For instance, if you say, I want to make as much USDT as possible, that is great. And that could be a target. For instance, I have $100,000 or $10,000 or $1,000 and I want to make $1 million or 100k or 10k. I want to 10x my money. That's great. That's a great target to have. It's definitely possible to do so. But then if you have that target, it is different than when you're looking at that you probably don't need all the charts that you need, but then it's also important to have this concept in mind. There's also a second target which you can actually go for, which is make as much Bitcoin as possible and stick with it until the end of the cycle. Which means that if you have $1,000, it can equal to an X amount of Bitcoin, which your goal is to make as much Bitcoin until the end of the cycle and then get out of the markets. So let's just go through those several strategies. The first one is making as much USDT as possible, which ultimately is independent of the amount of Bitcoin you have, and you're primarily focused at USDT valuations. In that aspect, you don't really mind where Bitcoin is moving or what actually your value is in BTC terms. So if you lose some, it's completely fine, but you're just looking at more USDT. If your portfolio goes from 100 to 300k, wonderful, you've done it, great. So you want to generate a high return with the assets you have, and you'd like to get out of the markets as soon as possible or at some point in time. That's up to you. It's definitely possible and a great goal, but for now, this is probably the main goal for most people, as most people are using their USD or Euro for other purchases, so they don't really mind what Bitcoin valuation they have. This strategy can be achieved by multiple strategies. So you can trade Bitcoin and hold it for more USDT. You can short the markets and generate more USDT, and you can trade altcoins to generate more USDT if you want to imply more risk. The second goal is to get as much Bitcoin as possible during the upwards bull market and then get out around the high of the markets. The funny thing is that by getting out, you're also achieving by increasing your Bitcoin estimate by having USDT. So for instance, if you start with 1 Bitcoin at this point, Bitcoin goes to 300k, you've got more USDT. But if you want to increase your Bitcoin value and your base pair is actually Bitcoin, or you want to have more Bitcoin the rest of your life because you truly believe that there's fundamentally strength in having Bitcoin, which I think there is, but you want to get out of the markets and you're looking to rebalance your portfolio, then if that 1 Bitcoin is being sold at 300k and you're looking for a way of getting back into Bitcoin at some point because it's getting too risky to sustain in the markets, which is a relatively normal argument, then by getting out of the markets and thinking Bitcoin could drop to 100k, this ultimately leads to generating more Bitcoin. So for instance, if you sold that 1 Bitcoin at 300k and you buy it back at 100k, you have 3 Bitcoin instead of 1. And my vision is still Bitcoin is going to be super big in the coming decades to come. So you want to get as much Bitcoin as possible, but it's a different mindset. This second goal can be achieved by several ways. First of all, trading Bitcoin by going in and out through corrections to generate more Bitcoin, which you ultimately want to hold in the upwards trend. Getting out of Bitcoin at the end of the cycle and buying back in lower. And the final one is trading altcoins for more Bitcoin during the upwards trend, after which you're looking to get out of your altcoins towards Bitcoin to keep those profits in the base asset. And that is, the last part is the most important part. What is your base asset? If your base asset evaluation is Bitcoin, then it might also mean that you don't really care about fluctuations in your USDT valuation. You just want to get more Bitcoin. The third goal, which is relatively uncommon at this point, would be to generate more ETH during the cycle, as your primarily asset is Ethereum rather than Bitcoin. You don't see it that often, but your valuations can be done in Ethereum as well, through which cycles against Ethereum could also be mentioned. And the ways of achieving this is still the exact same as with Bitcoin. You could trade Ethereum by going in and out through corrections to generate more Ether, which you'd want to hold until the end of the cycle, trading and swapping Bitcoin for Ethereum to generate more Ether, or trading altcoins for more Ethereum during the upwards trend, after which you're looking to continue to hold Ethereum, which is your base asset. But the essence lies in the fact that you need to be aware of why you're trading altcoins and why you're trading Bitcoin. Are you trading to get more Bitcoin, which is your base pair, which you're going to have over the years, which you want to establish through a bear market as well? Or are you going to trade more altcoins? Are you going to trade altcoins to generate more USDT? And that is a super important factor to understand, because we're also going to look at the valuation. I'll show you a few examples of why analyzing pairs in BTC value and USDT value are both super important. Our mission is to provide you with a financially stable future through crypto. When I started, it was quite overwhelming to see all the info on social media, to see all the coins as well. And it was very hard to find the right information to get started with the markets or keep up with the latest news. That's why we've decided to create the Crypto One-on-One course. Once you start building your own portfolio, it's a must to know everything surrounding the cryptocurrency markets with Bitcoin, Ethereum, DeFi, and all those other things. A fundamental background gives you a lot of information to be able to investigate potential business opportunities. Alongside with that, it's a must to know how you should be balancing and building your portfolio, what technical analysis means, and how your portfolio can be secured. And I always say, if you invest into something, you need to know what you're investing in so you can explain it to someone else. In the Crypto 101 course, I'll be guiding you through an 8-hour course through all the fundamental first steps of understanding the markets, building portfolios, reading charts, and mindset. It's a course that I wish I had when I started, and it's designed to lower your beginning mistakes, to have a great start of your journey. And you can find everything in the description beneath, where you can find all the topics as well in the course. If you have any questions, don't hesitate. Make sure to reach out to us on the contact form, and we are going to assist you as soon as possible. So now we get into the interesting part, which I truly like the most myself as well, which is we're going to talk about Bitcoin and USDT valuations, okay? So imagine if you held 100 Chainlink and you were holding these through this entire cycle, and I'll be showing you an example of how big the impact is of actually going from Chainlink to Bitcoin and swapping and rotating in between, and why understanding the Bitcoin and USDT valuations are super important to understand. So I'll be using the Chainlink comparison, which I discussed at the beginning of this video myself. After that, I'll be using a few examples from the current market, and then we probably are getting towards a short conclusion of this part. But first, if you are looking at the BTC valued focus, all right, then at this point you would have had an X amount of Chainlink, all right? So you would have had an X amount of Chainlink, which then you need to start rotating back towards USDT to generate more USDT. So first, I'm going to use an example of having 100 Chainlink. So in this case, at this peak, you still had 100 Chainlink, and that 100 Chainlink had a certain valuation at that point in time. So it's a very specific one. It's the 10th of August, and I'll show you what the difference is of having sold the actual Chainlink. Can I add text, please? Selling Chainlink towards Bitcoin, what does it do for my valuation? Keeping Chainlink towards the end, what does it do for my valuation in USDT and BTC? So I'll make this a little bit larger so you can actually see. So at this point, we've got 100 Chainlink, 100 times, what's the actual peak? 0.00165, which is 0.165 Bitcoin. All right. I don't know why I'm all of a sudden not able to type anymore. There we go. Current valuation 0.165 BTC. So now the first thing is, what is the actual valuation of Chainlink against USDT? At this point, August the 10th, it is $19. All right, $19. Now, what if you sold all of these and you swapped it towards Bitcoin because you thought the actual valuation of Chainlink against Bitcoin is a little bit high? So this 0.165 Bitcoin is going to be moving towards Bitcoin, and you keep it in there. So selling Chainlink valuation at May 2021 is 0.165 BTC USDT. All right. So at this point, well, let's say it's 58,300. It's $9,000 in Chainlink. I'll swap back if you keep it in there. So $9,670. All right. So you had 100 Chainlink, you sold all of them towards Bitcoin because it started to peak, and you kept the Bitcoin all the way towards the peak of Bitcoin, which is giving you a value of $9,670. Now, if you kept the Chainlink in Chainlink, current valuation is 0.165 Bitcoin. But if you kept it, valuation BTC at May 2021, valuation USDT at May 2021. So if your valuation of Bitcoin at May 2021, where's May 2021? It's here. It is well, I can actually say it already, 0.00765, which ultimately leads to 0.0765 Bitcoin. All right, so you're down minus 60% in BTC value. And that drop, you can actually also calculate it towards the value of Bitcoin. So the exact same value is there. Now, there we go, $4,450. $60. So the difference is 60%, and that is for a major. So that is for a major as in Chainlink, and you can imagine it doing this for a lower cap. This difference can be even heavier, which this difference can even lead towards a difference of 80 to 90% at the end of the cycle. So now you can understand that by understanding Bitcoin valuations and USDT valuations, you are able to digest which chart you need to follow, and that having a certain strategy is important to do, because if your strategy is to keep as much Bitcoin as possible until the end of the cycle and stack more sats, then you probably would have been ending off by somewhere in this ballpark. But in this case, you would probably be ending off by having less Bitcoin at the end of the cycle, because in this period of time, your Chainlink valuation was also going through the roof, because their all-time high is here as well, but it is lower than when you were going to be focusing on the swap from Bitcoin, from Chainlink towards Bitcoin. All right. So this is important to realize, that if you keep your 100 Chainlink in this ballpark, you would have hit an all-time high in Chainlink, but you would be worse off, or you are worse off than just swapping it towards Bitcoin. And then additional layer to this, if you continue to do this properly, the more often you do this properly, the heavier the returns will be compounding. So if you were able to also sell somewhere in a good ballpark because things are overvalued, and you're swapping towards USDT, using the money to buy back lower into Bitcoin, perhaps you would have been starting the bull cycle at 0.5 Bitcoin. But by keeping it into Chainlink, the 100 Chainlink, you would have been going into 0.028 Bitcoin instead of 0.5. So that's why this topic is important to understand. Now, current examples of valuations that are super low. Well, Chainlink against Bitcoin is currently at cycle lows, while Chainlink against USDT is making new highs. So this entire run is actually being fueled by Bitcoin solely, because if you're using the 25th of September and right now, if you compare that in the Chainlink against Bitcoin chart, the 25th of September, we are equal. All right. Solana is one of the coins that are super great at this point. Solana is moving up like a rocket. It's at 195. But if you're looking at the 25th of December and you're looking at the current valuation of Solana, finally it starts to pace up, but this high is the same as the current high, while the valuation of the US dollar is twice as high as this point. You can argue that because Bitcoin is consolidating, altcoins are following suit, but in terms of Bitcoin value, your actual high wasn't even right now. Your actual high was during the period that Solana started its initial run, which was here. Since then, you would have been the exact same. You would have had the exact same return if you kept it in Bitcoin. Just to show. Now the final example is, if you're looking at Atom against USDT, you can see that we're barely waking up. But then if you compare it to the actual valuation of the asset, it is making cycle lows. So it's the lowest point since December 2020, which ultimately shows you how much of an interest you should be having in certain ecosystems instead of having interest into other ecosystems. So why is this important? If you're going into the markets, you should be, as a core advice, be primarily focused onto one of the two strategies and shouldn't be combining the two. My personal goal is to make as much Bitcoin as possible, which I would like to keep until the end of the cycle and then sell it all, but ultimately generating more Bitcoin by doing the actual selling. So that is how I keep on compounding, because I truly do not believe in the future of our US dollars, although I still need to make my payments into them, but I want to keep stacking my sats and make that a bigger portion overall. Things become easier if you define your plan. So if you are trading altcoins through their BTC values or BTC pairs and USD valuations, that is possible. It's unfortunately not possible to actually trade most of the altcoins against Bitcoin because there is just no liquidity in them. But you can still charge them to be making sure that the actual valuation of that specific altcoin is lower or undervalued compared to Bitcoin. And we'll get to that in a little bit. If your goal is to get as much USDT as possible, then you're only screening those pairs and nothing else in a wish to generate as much USDT as possible and shouldn't be focused too much on the Bitcoin valuation of your portfolio. A few examples. If your USDT focused strategy, Bitcoin might drop against USDT, but altcoins correct as well. This is important for you because you're losing value in your base currency. The only understanding you should have is that having altcoins are riskier than Bitcoin, but having corrections in your USDT pair isn't really influencing your BTC valuation, or might be if you are fully allocated. So for instance, if Bitcoin drops, it might mean that the altcoins are also dropping in USDT pairs, but the Bitcoin pairs remain flat, which means that Bitcoin is just having a correction, and that's why it's pushing altcoins down. The second thing is, for instance, if what I just been showing, if the altcoin starts to rally up in USDT valuation, but your focus is Bitcoin, it might mean that because of the actual rally in USDT, the Bitcoin pairs are remaining flat because Bitcoin is going up. So you should also be aware that if you're BTC focused, that if Bitcoin starts to run up, you technically want to be in Bitcoin rather than being in the altcoins because they do not generate a higher return. So there are periods where altcoins will rally against USDT and Bitcoin, but there are also periods where altcoins are going to correct more than Bitcoin, or altcoins are not correcting at all against Bitcoin, and it's just Bitcoin dropping down. And if you see that happening and they jump in the Bitcoin pairs, that's when you want to trade the altcoins. But you need to be aware that having a correction in USDT isn't technically always bad for your portfolio, depending on the focus that you have. This is the exciting part, the interesting part we've done already when it comes to the valuations and screening markets, which of course we're going to discuss way more often on this YouTube channel. This is the exciting part, which means that I think that altcoins are super undervalued at this point. The question is, how far can we go from here? But they are still heavily undervalued, most of them. And I think that a lot of these altcoins that are fundamentally strong are going to have a rally towards their all-time high. But the question is, when is this going to happen? We have seen a few. We have seen a few, and we are seeing that there is so much interest in the markets at this point. And I've been saying this before, but these cycles often get valuations of assets which we were not expecting to see before the actual cycle started to take off. So if you're going towards a comparison of Ethereum, or actually need to do an Ethereum all-time history index, what we see here is that Ethereum peaked at $1,400 in this cycle in 2017. The initial peak was at $360. Then it did another run towards $1,200 to $1,400. And then in the previous cycle, which technically didn't came as high as we expected, it ran to $5,000 or close to it. I think that this cycle is very likely going to bring Ethereum to 20 to 30, maybe 40K. Which means that there is still a 10x possible, and even in the previous cycle we ran from $80 towards 4.8k. Now if we're looking at the current data, we can see that Solana is waking up, and it's already up to 25x since the cycle low at $8. It is currently at 194, showing a lot of interest and a lot of momentum, which means that there is still a lot to gain. And if it is going to copy Ethereum, then Solana might move to $1,000 during this cycle, perhaps even higher, who knows. But you can see that the strength is already there. The difference is that in the previous cycles, if we're looking at the historical price action again, is that here we started to run heavily with the altcoins after the halving. Now we're seeing the strength pre-halving, which shows that there is so much interest into the markets that likely these markets are going to go higher than we were anticipating. For instance, BNB is back to its all-time highs as well. Fetch, which is a relatively old altcoin, has been increasing its all-time high by 3 to 4x already, as the previous all-time high in 2021 was $1, and currently we're seeing $3 already. $3. Litecoin, beautiful example. Actually need to get the all-time chart if I want to use this properly. Litecoin didn't really show that much of an interest. We might be getting into the all-time highs again, but probably are not going to go way higher than that. So you can see that altcoins are technically doing it, but you want to get into newer altcoins, etc., etc. But the fact that pre-halving we are getting this interest, as in this case we are often not seeing that much of interest pre-halving into altcoins, it is a super strong signal for the market. So if you're looking at the explanation of the markets, you can see that usually pre-halving is the best period to step into altcoins. All right. So what you can do is that if you look at the data, the June 2016, July 2016 Bitcoin halving took place. The peak in Bitcoin dominance took place before. After the actual halving was done, we saw this entire correction taking place on the Bitcoin dominance, also fueled by the fact that Ethereum started to wake up. Now, in the previous cycle, we've seen the exact same. So currently, we are seeing the exact same again, and probably are repeating history, which inevitably means that the cycle is still the same. The only difference is that there's so much more additional new money coming into the markets from institutions, pushing up the valuations way higher, and there are more segments that we need to be aware of than in the previous cycles, which induce that there is more money coming in even more. So in 2016, the Bitcoin peak, which I discussed earlier in this part, 2016 Bitcoin peaked pre-halving, as we can see here. From there, that point was the actual peak in the Bitcoin dominance. From there, the altcoins started to blow away massively, inducing returns we have not seen before, which is one of the arguments that at this point we're still copy-pasting the cycle, which means that at this point there is still much more to gain for the altcoins in terms of BTC and USDT valuations, as they have just been barely starting to wake up. If you combine the data of being pre-halving at the potential low and you combine it with the valuations, then you can see that Bitcoin is currently cracking its all-time high, taking the liquidity here, and most likely peaking already, through which we are going to have a correction taking place. That the total market cap is a little bit behind in terms of that, because there's a lower valuation than Bitcoin. Bitcoin cracked this high, but the total market cap didn't, which shows that there's still a lack of interest into the rest of the markets. But we also know that when Bitcoin has finished its run, the money rotates towards other segments in the markets, because in order to get the money there, people need to make money with Bitcoin and need to be more confident by having the Bitcoin, and then they rotate it towards altcoins, which we can also see by the total 2 chart, which is currently at resistance, by the way, but it has seen its first run, but is still approximately 600 billion away from the all-time high, which is in this case the total market cap excluding Bitcoin. And if you start zooming out even more, if you're looking at total 3, you can see that there is a lot of interest at this point in the markets, but that the total 3, which is the crypto market cap excluding Bitcoin and ETH, is currently around 400 billion away from its entire previous all-time high. And usually this all-time high is being cracked around 6 to 7 months after the halving takes place. So there is still a lot of momentum to gain, especially since the previous cycle we saw a 4x of this, and I think in this cycle we can technically look at a 5 to 8x of this high, which means that you can still generate a potential 10 to 15x on your altcoin positions if you trade it properly. But the valuations of altcoins are still super low. I've discussed Cosmos already, and Cosmos is currently showing a chart that it's on the ground. It is making a cycle low. All right, it is making a cycle low, which might induce a weekly bullish divergence here, but it's still far too early for it. But if you want to get yourself positioned into a project like Cosmos and you believe that's actually a strong one, you want to position yourself in DeFi or in any of the other ecosystems, then perhaps this is the chart that you need to look at, because the USDT chart is showing that there is a slight momentum. And if additionally, if you're looking at this chart, you can see that there is still a breakout to gain, in which if we start to rally in the BTC pair, it is technically possible to see 2 to 3x in the coming period if they are going to follow suit towards the all-time highs. Simply put, Chainlink has the exact same. It's closing in on the cycle low. I've discussed this valuation structure, that if you use this valuation structure and currently you are into Bitcoin solely, there is definitely a possibility to swap some towards altcoins at this point to generate a higher BTC valuation, because at some point Bitcoin will continue to correct against the dollar, but the altcoins will start to bounce up in their Bitcoin pairs, and that is the moment where you want to rotate it towards altcoins. And that's also, cycle lows are the periods to get yourself into altcoins, which is currently the case. Well, if you're looking at Chainlink against USDT, you can see that we're currently still far away from the all-time high, but it's technically possible to get into those regions in the upcoming periods if Bitcoin is finishing its correction. Now the final one is, if you're more into an advanced one and into DeFi, is that you need to look at the amount of locked values and yields that are being generated when it comes to DeFi or anything comparable to it. And as you can see, the total value locked is currently 101 billion, which is up around 3x from the cycle low actually. Most of it is into Lido, but also Eigenlayer is getting a lot, Aave is getting a lot. And as you can see that there's more money getting into DeFi, and it's getting into the theory that if we get some more momentum towards the highs here, which we have established during the period of the end of 2022, that usually the price starts to follow through. So for instance, if there is more Ether being staked into the system and Ether's value starting to grow, it is also likely that there is going to be a higher return on the actual assets as the collateral is increasing. So this is an advanced tool if you're looking for more in terms of valuation. But you can see that the interest started to increase. That's why I'm starting to get myself positioned more and more into DeFi. But we'll discuss this in the upcoming videos even more. Now, if you are understanding how to start a portfolio and if you have the valuations done, then the next thing is how to take profits or how to trade during an upwards bull market, right? Well, it's an important part to understand taking profit. It's the fun part, because if you have been doing the first two steps correctly, then the third one is relatively easy. But there are some metrics that you could be using if you're trading altcoins and if you want to start taking profits. First of all, taking profits is necessary because I'm a big favor of the rebalancing strategy. Rebalancing means that if a certain asset starts to actually outperform, then you should be reallocating those funds towards a different asset, because the risk of having that asset in your portfolio increases, and because it has a higher risk involved, you need to swap towards another asset that has lower risks involved by having that in your portfolio. So you need to be aware that taking profits need to be done on a gradual manner. There are several ways of doing that. As I mentioned, rebalancing is super important, but you could also decide, I take profits on every 10% jump by doing and swapping it towards Bitcoin or USDT. Staying into a position entirely is super bad to do. Just think of waves and being able to just ride the waves everywhere you go. Of course, having that 100x is great, but it's not reality, because that 100x is just a very tiny period of time that you have available for it. Then, if you would have been starting to take profits, when are you getting back into it? And I've got a very valid reason for that in terms of digesting. So first of all, every time an altcoin drops between 25 to 60%, you need to get in, as long as it's in an uptrend. So here you can see 50% correction, you get in. Here's another 40% correction. Here's another 40% correction. This one is a little bit rough, 62. And if it is not dropping that much, you just do not get in. That's just real easy. 35. So you would have been positioned. Here you have another one, 43%. In between is smaller. Here you have another one, which is 25, 37%, and then it's over. If you do the exact same for Solana, the fundamental choosing when to sell on grounds of rebalancing or the end of the cycle, that is a different topic, but you get what I mean. If you're looking at this chart, I'll just need to zoom in, and you use the exact same framework. Here we had a correction of 34%. Here we have the exact 25% correction. Here we have a correction of 27%. Here we have a correction of 54%. And it continues to do like this. Even here, you've got a few corrections taking place from the peak. In this case, it's 48%, and then it starts to be destructive. But also in the recent case, you can see that in between there are minor corrections taking place, 13%, 12%. There's another one taking place of 18%. There's another one taking place of 25%. That's the first one. And here we had a correction of 38%. So that is in line with the actual, if something starts to run, just don't use it. Just don't trade it. Just wait for the correction. Even if for Solana, just wait. It is doing great. It's probably going to continue to do great, as usually you will get a new high. But it's gone. The entry point is gone. But there are some points or altcoins that are very interesting to look at. So my general rule would be 25 to 60% corrections are technically the corrections that you want to get into. Alright, we've had a 35% correction here for Chainlink. We're currently experiencing a very fine 40% correction. For Arbitrum, it is currently enduring a correction of 50%. So yes, I will definitely be interested in getting into those positions based on those things, because if it is undervalued and it is getting so low, the lower it gets, the more you want to be allocated into the actual asset. So the higher it goes, the further you get into the cycle, which is also in line with this theory. The higher it goes, the further you get into the cycle, the lower your allocation should be. And that's what I also mean. If something is running as much as Solana is doing, your allocation should be less than when it was at $8 or when it was at cycle lows. That is just how simple as it is. But this is a technique that I'll be using, and I think it's super important for you to understand. But we'll be discussing this even more in all the videos that we make. I hope you have been enjoying this update and the fact that I'm providing content for you to make you a better trader and investor, making yourself ready for a financially stable future. If you did enjoy this video, can I ask you to do me a favor and comment your thoughts on the video beneath. All your feedback is very helpful by building and continuing the level of content which we aim to provide. Thank you, and I'll see you again next week.